Okay, let's jump right in. We're talking stablecoins today.
Right. Those cryptos pegged to, say, the US dollar, designed for stability.
Exactly. Kind of the bridge between crypto and traditional money. Super important space.
Absolutely. They underpin so much, so any big moves there, well, they tend to make waves.
And speaking of big moves, Circle they issue USDC, right?
That's them. A major player.
Well, they just went public. New York Stock Exchange, and apparently it wasn't just a small listing.
Oh, no, it was huge. Reports say the share price jumped, what, 167%?
On the first day, June 5th. That's a massive debut.
It really is. Sends a big signal, you know? Traditional markets showing strong interest in these crypto infrastructure companies. Maybe some validation there.
Totally. And seeing that kind of reaction, well, it immediately makes you think, okay, what about the biggest stablecoin issuer?
Tether. USDT.
Yeah, Tether. Are they going to follow Circle onto the stock exchange?
That was the big question floating around. And that's what our sources are getting into. We're looking at what Tether's CEO, Paolo Ardoino, said just days after Circle's IPO.
And what that reveals about their strategy, how they view themselves, their value.
And crucially, what they're actually holding, what's backing USDT.
So our mission here, for you listening, is to unpack Ardoino's response, which was pretty surprising. We'll dig into some, frankly, eye-popping valuation numbers being thrown around for Tether.
Numbers that sound huge, but are apparently being called bearish. It's interesting.
Right. And we'll look at the moves they're making behind the scenes, especially with their treasury assets like Bitcoin. It seems Tether is fast becoming a very significant Bitcoin holder.
Yeah, it looks like they're carving out a very different path compared to their competitors.
Okay, so Circle goes public June 5th. Huge success. 2 days later, June 7th. What does Paolo Ardoino, Tether's CEO, say?
Well, according to the source, his response was pretty direct. Just no need to go public.
Wow. No need. That's quite a statement, especially right after Circle's big splash.
It really is a stark contrast.
Yeah.
Circle embraces the public markets, Tether says. Essentially, nah, we're good.
And that difference, well, it's kicked off a lot of speculation, hasn't it? Like, okay, if they did go public, what would Tether even be worth?
Exactly. And our sources mentioned a number put out there by John Ma. He's the CEO of Artemisys, a crypto analytics firm.
Okay, what did he suggest?
He floated a speculative valuation of, get this, $515 billion.
$500 billion for Tether.
That's the number being discussed.
Mm-hmm.
And Ma put it in context. He said that valuation could potentially rank Tether as the 19th largest company in the world.
Wait, 19th? That's bigger than household names, right?
Yeah, potentially larger by market cap than giants like Costco or even Coca-Cola.
Yeah.
It really gives you a sense of the scale being imagined here.
Okay, that's wild context. But here's the kicker. How did Arduino react to that $515 billion number? Did he just say, wow?
He did acknowledge it, called it a beautiful number, apparently. But then, almost in the same breath, he suggested it might be a bit bearish.
Hold on. $500 billion is a bit bearish. How does that even compute?
I know, right? It sounds counterintuitive. But it leads to the key question, why? Why would the CEO think $515 billion is potentially low?
Okay, so what was his reasoning?
Well, he explicitly tied it to Tether's current and increasing Bitcoin plus gold treasury.
Ah, okay. So he's pointing to their reserves. He's saying the value of the Bitcoin and gold they hold is growing so much that maybe even that huge number doesn't fully capture their worth.
That seems to be the implication, that their underlying assets, especially those appreciating ones like Bitcoin and gold, are a massive factor in their valuation, maybe more so than for other stablecoin issuers.
Interesting. So they see their value tied up in the potential appreciation of these reserves.
It appears so. And it's worth noting that $515 billion isn't even the ceiling in these discussions.
Oh, people are speculating even higher.
Yeah. Prominent Bitcoin advocates, names like Anthony Pompliano and Jack Mallers, have apparently thrown out figures suggesting Tether could, eventually hit a $1 trillion valuation.
$1 trillion. Okay, the numbers are just getting staggering.
They really are. And just for context on Tether's current size, in the actual crypto market right now.
Yeah, where do they stand?
At the time the source was written, USDT was the third largest crypto overall by market cap. Its value was around $154.83 billion.
So already huge in its own right, over $150 billion market cap.
Exactly. So you've got this massive existing presence, these huge speculative valuations being discussed, and the CEO hinting that even those might be conservative because of their treasury.
Which brings us nicely to, well, what are they doing with that treasury? Let's move from speculation to action.
Right. Ardoino mentioned being excited about the next phase of growth. And it seems Bitcoin is a big part of that.
How so?
Well, our source introduces a company called 21 Capital.
21 Capital. Never heard of it.
It's pretty new. Founded by Jack Mallers.
The same Jack Mallers who was speculating about the trillion-dollar valuation.
The very same. And 21 Capital's whole purpose is basically to help companies and high-net-worth individuals hold and manage large amounts of Bitcoin as a treasury asset, securely.
Okay, a specialized Bitcoin treasury service. What's Tether's connection?
It's a very direct connection. On April 24th, it was announced that Tether had become the majority owner of 21 Capital.
Wow. Okay, so Tether bought a controlling stake in a company designed specifically for holding Bitcoin reserves.
Seems like a pretty clear signal about their own Bitcoin strategy, doesn't it?
It really does. And has this 21 Capital actually done much yet? It sounds brand new.
Despite being new, our source says it's already shot up the ranks. It's apparently become the world's third largest corporate holder of Bitcoin.
Third largest already. Who are they behind?
Only Strategy, formerly MicroStrategy, and the Bitcoin mining firm MER Holdings.
That's incredibly fast. So Tether, through this new company, is accumulating Bitcoin at a serious pace.
It certainly looks that way. And there's a specific large transaction mentioned in the sources, too.
Oh, yeah. What happened?
On June 3rd.
Yeah.
So just days before Ardoino made those comments about not needing an IPO and the strength of the treasury.
Okay.
Tether reportedly moved a huge chunk of Bitcoin. The number was 37,229.69 Bitcoin.
Whoa! Over 37,000 Bitcoin. What was that worth?
At the time, roughly $3.9 billion.
The billion with a B. Okay, $3.9 billion worth of Bitcoin. Where did it go?
It was moved to addresses linked specifically to 21 Capital, this new Bitcoin platform they now own a majority of.
So they buy the company, then almost immediately transfer nearly $4 billion in Bitcoin into it.
That's what the sources indicate. It feels very strategic, less like passive holding, more like actively managing and building up this Bitcoin position through a dedicated structure.
Yeah, it paints a very clear picture. Are they doing anything else, or is it all Bitcoin focused?
Well, it's not only Bitcoin. The source also briefly mentions that Tether recently launched something called an Omnichain version of their Tether Gold stablecoin. That's USDT 0.
Omnichain Gold, what does that mean?
Omnichain basically means it's designed to work across multiple different blockchains, making it more versatile. And they launched this particular version on the TON network.
TON. Okay, so they're also expanding their gold-backed offering and exploring newer blockchain ecosystems, too.
Exactly. Diversifying their product reach, it seems.
Okay, let's try and pull all these threads together for you listening.
Right. So if you connect these dots, you get this really interesting narrative about Tether's strategy.
On one hand, you have a major competitor, Circle, taking the traditional route, going public.
And then you have Tether's CEO saying very clearly, we don't need that. And his confidence seems tied directly to their own setup and maybe more importantly, the strength of what they hold.
He specifically calls out that growing Bitcoin and gold treasury. He suggests that maybe even a $500 billion valuation is bearish because of those assets.
Which kind of hints they might be valuing themselves increasingly based on the potential appreciation of these reserves, like Bitcoin. Well, that's a different model for a stablecoin issuer, right? Usually the focus is purely on stability pegged to fiat.
Exactly. And it's not just talk. We see these massive concrete actions backing it up.
Acquiring a majority stake in a dedicated Bitcoin treasury company, 21 Capital.
And then immediately moving billions of dollars worth of Bitcoin into it, making that entity almost overnight one of the biggest corporate Bitcoin holders on the planet.
Yeah, it really looks like a company aggressively accumulating hard assets with a major focus on Bitcoin as a central pillar of their strategy.
And it's a path that looks very different from competitors like Circle, who are seeking integration with traditional finance through public listings.
It suggests Tether might have a vision where their stablecoin is increasingly backed not just by cash equivalents, but by a large appreciating pool of assets like Bitcoin.
Okay, so the main takeaway here. While Circle went public, Tether signaled a hard turn in a different direction.
Yeah, a direction based on confidence in their current structure and, very pointedly, the growing power of their treasury, especially their Bitcoin holdings. They seem to see massive value there, perhaps even beyond what the market speculates.
And the scale we're talking about is just huge. Speculative valuations in the hundreds of billions, maybe even $1 trillion down the line.
And concrete actions involving tens of thousands of Bitcoin, billions of dollars, being strategically moved into place through this 21 Capital entity.
So it leaves you with a really interesting thought to chew on.
Definitely. As Tether keeps accumulating Bitcoin like this, making it a core treasury asset through companies like 21 Capital, what does that do?
How might that strategy change how people see Tether? Is it just a stablecoin issuer anymore or something else?
And beyond just Tether's own valuation, how could this reshape the whole relationship between stablecoins and Bitcoin in the broader crypto market?
What happens when the biggest stablecoin issuer also becomes one of the biggest corporate Bitcoin whales? That's definitely something to think about.